So, a couple of things I just want to talk about, as in the report that I sent out yesterday. Oil is obviously very much a major issue at the moment. It dipped below 45 overnight. Um, and what we've got tonight is something that everybody's got a keen eye on, is the oil inventories. Obviously, the biggest issue at the moment is the oversupply of the product and the drying up of demand out of the emerging markets. As money flying out of the emerging markets, they're not using oil as much. Um, Production and productivity are obviously are falling and stalling, and therefore the use of energy is lower and the supplies are increasing, and that is also driving price down. So people are watching that with this crude oil inventories figure comes out every week on the fourth day after the weekends. So they'll be monitoring that quite closely. The other thing that is very important for today is the potential non-ruling or the potential ruling against the ECB tonight. Um, Unlikely to happen, but if it does happen, then the QE that they're looking to do next week on the 22nd would obviously be yeah, unlikely. If the European Court does say that it's unconstitutional what the ECB is doing, then they'd have to rethink what they're going to be obviously doing next week. So there's two big things that are happening this week. Following on from that, we've got Aussie unemployment tomorrow, and a few other things, CPI. Unfortunately, the POMs, I have been sort of liking the UK economy. Last night's inflation figure, although it's only one data, it's not healthy. If we look at the chart of what they've been doing, the POMs had, 2013 was good, it was stable, and you could see the currency ran from 48 to 70. That's $1.48 to $1.70 throughout 2013. And from pretty much 2014, it struggled, and then has obviously fallen quite drastically, along with most other currency pairs. So the inflation down at 0.5% is pretty poor. It's the lowest it's had since, who knows, 2000, I think it was. It's the lowest it's been for a very long time, and that's not a good sign. Um, and you can obviously see the trend of that. So, they're getting caught up with the Europeans' deflationary picture, and that's starting to change my view on the pound and wanting to actually maintain long positions on it. The reason why I say that is because a lot of you guys are sending me today to have a look at this, which is the pound Aussie. So I'll come to your emails. I'll just tell you what I've got on. The only thing I've got on is a 4-hour Aussie trade, which I took yesterday after this little ring low here. And it's just gone sideways since, so it's not that crash hot. This reversal bar, high test bar, I wasn't worried about it. I didn't see it testing as anything. 82, is not really a major figure. Um, if we look at 82, it hasn't really done much in terms of being a support resistance. Not a strong one anyway. So I wasn't worried about the high test bar, but this reversal bar came, and I figured, why move my stop? 81.30 seems to be a bit of a support level now, and I didn't feel the need to move my stop any closer. And so my stop will remain there until I can get it to sort of break even. My target is 3 times my risk, which also happens to work out to be the 50 EMA on the daily chart. That was just a coincidence. I wasn't targeting that. I was targeting 3 times my risk. So that's all I've got on at the moment. And I was hunting the Aussie Kiwi. I missed it. Um, but I don't know if I am too upset about that. I'll bring up the Aussie Kiwi. I was waiting for a decent cycle on the 4 hour, and also to get above 150, preferably above this high. We haven't really breached that high yet, which in the daily is, that high there. But in the if you look at the 4 hour in terms of the cyclicity, we're still making higher, lower highs and lower lows. Until it breaches this, I'm not really willing to buy into this pair. If you remember your cyclicity rules, at this point, we're still making lower highs and lower lows. So we haven't had that higher high yet for me to go, okay, now we're in an uptrend. So I'm still being patient, waiting for that one. I know some people got into it on the daily, doing a phase 2 trade a couple of days ago, but that's okay. I'm not into phase 2 trading at the moment. So that's that Aussie Kiwi. Let's come to your emails. And kicking off the first one is Aussie Sing. And we've got a lovely ring high here, coming off the 50 EMA. 200's well or higher. There is a trend line, but you can't add that as resistance, which you haven't, which is good. Lower highs, lower lows, yes. Below the moving averages, yes. EMA resistance, yes. Horizontal, you got 109.90. We'd call it $1.10. It's not, 10 pips is, I prefer to go to $1.10. It's a nice round number. And 10 pips, the market will turn in front of it. I mean, I dare say that low there is not $1.10 either. And I can refer you to the pound itself. When it came up to $1.63, it was a very strong resistance level. Stop doing that. $1.63, and it shied away from it twice across here by some 40 pips. So the market will shy away from things like that. And so $1.10 is a nice round number that I prefer to have, and suggest that is the level that the market's looking at. We can see, yes, it did shy, and it has shied there, but that to me is a good enough example of a resistance. Anyway, you've noted the resistance level. Sorry, just whilst it was a support, it's now acting as resistance. Has it had that effect? I don't go far enough back. At other points in its career, or is it just this one time that it was at Bandcamp? So it's the more I can't see, but the more it's reacted to it, the stronger it is. So I'll just presume that you've done that, and that you also can see that it's a strong support resistance line. You've got here a strong support at 106.20. Again, I can't see that. I'll give you the benefit of the doubt and say there is. Bearish chart pattern, third cycle. 1, 2, coming into the third, yeah. There is some hidden divergence there. It's a minor. You haven't given it there. But if we look at this high here, yeah, and that high there, if we look at those two highs, right? The high in RSI here at that time was 74. Here it's 76. So you do have hidden divergence of a certain degree, and it's good that RSI is up here. That means that we're already getting the buyers being exhausted up at this level. So therefore, if we get a lower low here, you got further to fall. It's much better to sell when your momentum's above the 50 mark, rather than selling when it's down here somewhere. So we can see this opportunity before The momentum's in the sort of 60s areas, which is the ideal sort of place to get short, as it is here now. Personally, I think the Aussie's got a bit more upside into it, but whether it does against the Sing dollar is another question. So, we've got a technical setup here that looks pretty good. We've got 2 days of selling off a ring and a ring high formation, off a support, off resistance, and off the 50 EMA. The next thing you want to see is a Fibonacci of some strength that is doing it, and as you've noted, you've got the 50. Oh, okay. You got the 50, but why is the 1 there? Let's have a look. I think I know why you've done that. You've gone there because it's the first close under the 50, that bar there. Yeah, look, that's the only time I would do that is if it's changing from, let me go back to the Aussie Kiwi, 4 hour. The only time I'd worry about doing that is when you get for example, we've had a cycle underneath here, and we're looking at the first cycle above it, right? So that point, I would start my Fibonacci from here. Okay, do you understand? I hope you guys, can you guys hear me? I'm not getting, you're all pretty quiet there. At this point, I would start my fib at the first bar that crosses the 50 and closes above it. Thanks, Jess. But I'm not going to start it down here because this is a cycle underneath the EMA. Okay, so in this example here, we've got a clear cycle. Yes, the price is above the side of the other side of the 50, but it's a nice cycle to be going from. So I'd go from that point. I understand, why you tried that, but I would do from that point. And if we look at it, whereas the 50 is 3 points closer to it than what your 50 was, which is, I suppose it's splitting hairs. Yours is 30 pips away from the mark. I know it's probably splitting hairs, but there is a difference in that this is the full cycle phase 1, and in the Aussie Kiwi, on the 4 hour example, this is, you're not going from here or even from there, because this is a phase 2, and it then had to think about it, and then it went, yeah, okay, we'll continue into phase 1 up. So it's from that bar there that I would go, potentially even this bar here, because that's where it really did start to accelerate after this inside seller bar. Yeah. I hope you're online there, mate. Are you seeing the difference there? Can you just let me know if you are seeing the difference? You go get them, mate. Right. Yes, cool. Understood. Fabulous. Okay, so that's the Aussie thing. We've got, moving along. I think that's technically it's good. It's got everything that you need there. And whilst I do believe the Aussies got a little bit of a bounce in it, it's only a short-term bounce. And perhaps that's all it's had. That short-term bounce is all it needs against the Sing, and it's going to fall. You may not get triggered in, which means you should cancel it, but technically that's a very good setup. All right. Network connection issues. It's a bit wet and overcast here, so I do apologise if the audio is not too crash hot. Got a question here, no email, no sort of technical analysis, but it's looking at the Europe in a Q&A a while back. I said that if the ECB in the next meeting, which is next week on the 22nd, is it next week on the 22nd? Oh, it's on the 22nd. That if they did quantitative easing, that I expect the euro to rally. And I kind of, it's not that it's going to be a trend changer if they introduce quantitative easing. It is going to devalue their currency. But I also see it as a bit of two things. One is that it'll be seen as a positive move by the ECB, that they will, that the market will take that as a finally that they're actually doing something worthwhile. And it'll depend on the structure of the program that they're going to install as to how the market will take that. So that's the first thing: is the market should view it as a positive move by the ECB, and that's a buoyant, bullish concept. And so they'll go, yeah, well, they're doing something. You know, finally, there's going to be some growth in Europe, and then that sort of initial hangover will turn, and they'll start to sell it, understanding that geez, the bond, they're purchasing bonds to drive down the currency. So there'll be that initial euphoric, oh yeah, this is a good thing, Europe's turning the corner. The other thing that I also envisage is why there's a bounce is because it's had such a huge, strong fall. They've been talking about ECB since friggin' mid-year. QE. The ECB's been talking about QE since mid-year, and everybody's been expecting it to happen, and it hasn't really happened. And when it finally does, I do expect to see a bit of a bounce. So it's just understanding, or my understanding of my feel for the market. There's no sort of research in that. That's just the way I approach the market. Last month, you say when the Swiss dropped their rates unexpectedly by 0.25%, we had this huge spike. Yep. And you understand why that happened. That's because the Swiss National Bank is trying to weaken their currency. Okay. So you understood that. That's great. But you suggest that all the other European crosses on that day fell. The reason why the SNB unexpectedly lowered rates was because they feel the threat from the ECB, the European Central Bank, and the weakness in their currency and the weakness in their interest rate market. So they, let's have a look around that. When was that? It was, the date was 18th. So if we look at the 18th on other currency pairs, 18th of December, how the ECB, oh sorry, that you're saying that the euro fell on the 18th, 10th, 17th, 18th. Yep. I would suggest that everybody went, well, it's cheaper to, oh sorry, there's, if the Swiss National Bank is worried about the European currency falling, then perhaps that they should get out of the European currency. That's the kind of the way that I would understand that. It's not, they're not really sort of saying, oh well, we get better rates at the EC at the Swiss National Bank, so we'll move our money there. No, it was more about the sentiment and the view on the European currency. I hope that sort of makes sense. Right. We've got a few on the pound. Oh, just before I go there, Shane says, is it more important to run a fib from the EMA or endpoints of the swings? It's more important to be doing the phases, because there's two ways to be looking at. There's two ways you look at Fibonacci's. Right? You look at fibs, and such as this particular graph here, in the larger moves. So this move from that low point to that high point, or this all-time low, well, yeah, all-time low to this all-time high. And you're looking for support resistance lines from that. That's one way to measure or use Fibonacci. The other way to use Fibonacci is to measure the cyclicity, or the cycles So if we're looking at the 4 hour over here, you're measuring the cycles, and in that instance, you're going from for here. I would, this is, we can see this cycle here, um, and it didn't really get back to the 382, and so then you go, well, perhaps the cycle was here. That's one cycle, two cycles, and then we get this second move down here, and the price came back to the, well, you could say, well, there's another cycle, and then potentially go, well, here's the cycle. So it's not the moving average, it's the cyclicity, and that obviously made a higher high. And so in this instance, I wouldn't be going, you potentially go from there to look for sellers here, or you go, well, in the bigger picture, the cyclicity is from that point to that point, and then from that point to that point, and so we're looking for some sort of selling here. If that, I hope that sort of makes it clear. I'm not going from the moving average. I'm going from the cycle, because I'm measuring the phase one. Measuring phase one to get the next phase one. And in this one here was, it's fart asking about. So this example, I would go from there. Yep. And then in this one, I'd go from here, because that's a pretty clear looking cycle. That's clearer? Cool. Right. So then we go to pound Aussie. That's your daily. You had a monthly in there, I think, didn't you? Yeah. So here's your month. The look at the pound Aussie monthly. Well, that's a clear trend. There's a lot of people I know have got money over in England and they want to bring it to Australia, and just not yet. We've got some little trend going here. There's quite a bit of resistance around this $2 mark. Yeah. What's this? $1.92. I think you're going off that double top there for that. But 2 is big resistance. I was expecting this pair to get up here, but with now the pound sort of faltering a bit, it might be doing a bit more of just crap for the time being. Yeah. Okay. Don't know about this channel. I mean, you've obviously linked these highs, these two highs here, and it's tagged that and that, and then you just drag this to match there. It's not really, to me, that until you get a second touch on the lower one, I wouldn't say it's in a channel. But this trend line is certainly valid, yes. And same here, you haven't really got the second touch on the top one, but you certainly do have the good support there on a trend line support, which you've noted. That's fabulous. You've got hidden divergence, which is great. No major support in the way, no major resistance, I would suggest. 92 is from that high there. Okay, it is a bit of a resistance, but certainly this is the big one. That's, both of them should be well within risk reward ratio targets. RSI convergence, yeah. Horizontal support of these, yeah. What's this 83.90? What's that? Oh, that's the 200. Okay. Moving average support, yes, the 200 EMA. Okay, you're not above that, but you're getting higher highs, higher lows. Okay, it's all good. We're certainly getting the sort of buying price action that we want. Your pound Aussie, the momentum's in the right area. We had a strong buyer bar followed by a higher high. Okay, it was a bit of a seller bar, but if it gets up here, we'll still see buying. And in terms of risk reward, you're risking about what are we looking at, about 290 pips for at least 600 So that's risk reward of 3 just to there, which is okay, or 2 points something, well over what we normally look for. So yeah, look, that's well worth um, having a look. If I'm long the Aussie and I buy that, well then I'm effectively long the pound, which is not a bad looking trade either. Okay, so that's good. Don't know how price action will be for tomorrow. You sent this to me late last night. Jeez. First big resistance gives a risk reward of 1.75. Doesn't it? I thought it was closer to 2, being 300 risk, 600 target. And then if we go to 2, it's four times. Okay. And so risking 300, you got 600 here, and then whatever, 2,500 pips there. Certainly well within our risk reward ratios. That's good. Okay, knock sec. Higher highs, higher lows. You want to go long? Short. Okay. Knock sec. You want to go short on the daily? Well, that's understandable, considering where oil price is going. Don't need that anymore. Aussie Kiwi can. I might keep that just to keep an eye on it. I'd prefer if it broke that high, but knock sec. Good cyclicity. Oil price shooting itself, so is the Norwegian kroner. One concern I do have here with this is you're not making lower highs, lower lows. It's a bit like the yen, which I discussed yesterday or Monday. Is that this move here should have sort of trickled down and made a low, maybe not as, this is a bit extreme, this one here, but it should have gone a lot further than it did. We should have seen it getting, well, I suppose it did get oversold, but I want to see that more bearish, and then it had a bit of a flick back and didn't make a higher high, so that's okay. That's my first concern, is that you want to see that making lower lows. I don't think I've got enough data to have a look at that. Yeah, 105.50, I suppose there is a resistance level there. It's a minor one, but it's okay. So, hell's that? Oh, that's a, what's that? Red X. Never seen that before. Lower highs, lower lows, below. Well, I'd query that. I really would. That'd be my concern on it. So I wouldn't be putting full percentage on it. The other thing is your momentum's already, I suppose it's at 45, but I hope you're not sort of chasing the market by getting in now, because the trade should have been yesterday underneath this bar here. So you should have been getting in around 103.95 or something like that, about where price is now. You can see that line there, and you might be able to see that line, which is just underneath that bar. I know you sent this to me last night. But yeah, with momentum sort of here, I suppose it wasn't there. If you traded yesterday, it would have been a bit higher. That's okay. Yeah, I'm a little concerned about this. That's my biggest concern about it, is that this should have made a lower low. As we can see in the cyclicity, every time it does move down, it did. So that's what we want to see and should have seen and are not seeing, and that's my big concern about it. And that should stick out to you in your first thing when you're looking at lower highs and lower lows. If you can't see that clear cyclicity, like the Aussie Sing, when you compare that to the Aussie Sing, we can clearly see, boom. Um, well, in this case, you might have gone, well, hang on a minute, this should have made a lower low here, and now we've made a higher high. And then it's re-engaged in the downtrend on this day here, as it broke all these lows on this day. But now this cyclicity, that's clear to see. You want to see that. And you're not seeing that in this pair. Bearish price action. There was. I don't see any order in here. But you noted that this is the time. This is a trade bar. You should have gone underneath that, and that's good. There's just no no trade there. A little. I'd like to see more of analysis as well. Seeing things like trend lines, and I mean, was there a trend line on that knock sec? No, not really. Not a valid one. I mean, you could argue that. 1, 2 touches, I suppose. But you haven't put any of that sort of stuff on there. You're just giving us the lower high, lower lows, or a very short checklist. Okay, so 1 cycle, 2 cycles, rather than the moving averages, you're going off this trend line. That's fair enough. I don't mind that at all. And therefore, you're getting the 61.8. That's a good pickup. So in this example, going back to Shane's question of, do we go off the 200 EMA, or off the 50 EMA? Well, some would argue, well, this is the cycle underneath, so let's go from here to draw our Fibonacci. But as this trader's just recognised, is that, hey, let's go off this cyclicity of this trend line. So it's cycling along the trend line is the argument, and we can see the 61.8 is a good support level. So that argument I don't have a problem with. If it's cycling along the trend line, then there's your phase 1. Here's your phase 2 back to that trend line. Here's your phase 2 back to that trend line. And that's your argument. I don't have a problem with that at all. Once you've identified, okay, well, it's cycling along this particular. And Jess, you might want to have a look at your E signal, because you can see here the 200 is miles away from the price. I noticed that you had that as a supporting reason for your trade, and E signal was the 200 was quite short back to here. If you squeeze the price up, you'll get that 200 to come in at the correct price. Yeah, so this trend line, this is the analysis has been looked at and saying it's going from here, and that's perfectly fine. Don't mind that at all. And I presume you're targeting up here somewhere. Where's your email? I thought the pound Aussie was offering a good setup and similarly placed reduced risk on this today. Entry 5 pips above yesterday's bar. Okay, not today's. This you sent me yesterday morning though. Yesterday morning. Okay, so before this bar had finished. It was only a couple of hours old, this bar. So you went above. That means you'd be in the trade, I think. Um, should be going above this here. Well, around 88, 86.50 something is where you should be getting in. View to add to it if buying is definitely confirmed. Horizontal support, RSI convergence, although if the price is not quite above the 50, you're not worried about that. If you're saying it's cycling along the trend line. Price action has not concurred on the Swiss or Euro Yen, so waiting for possible wings lows. Also wanted to ask whether gaps in the market can offer areas of support resistance. They tend not to. Gaps tend to come back and get filled, and that's what I'd be expecting on this, is to come back and get filled. They always do, whether it's immediately the next day, such as the pound did. Oh, geez, it almost did. Well, the Aussie did anyway. When it gapped down on that day. I think the Aussie gapped down on that day. They come back and fill those gaps in at some point in time. It's generally very soon after, or in this example here, it'll be some time after, but they will come back and fill it in. You can see the gap here got filled in 4 days later. So they will come back in. Are they resistance levels? Not. I don't see them as a big resistance level, no. Okay, so this is looking okay. I presume you've done your extensions for your targets of 61.8 or 2 or something, although it's not on there. That's okay. Your Aussie Sing, everyone's looking at that. Again, I can't advocate that as a trend line resistance. You've also gone from that level on your fib. Again, I'd go from the top of it, as you've seen me do. But that trend line that you've drawn, you can't say that there's your 2 points. We don't have a third reaction, and we can't sort of go, oh, let's go to that high there, or this high here, because it gives us a reaction over here. That just doesn't make sense. So I hope that's not what you're looking at, saying, oh yeah, I've got trendline resistance, because you don't. But what you have noted is the divergence, which there is. So if we then go, well, here's the cycle. There's my cycle, and I can see that there's, on that cycle, there is resistance. Oh, sorry, divergence. Yeah. So that's all good, and that's it for the day. What do we got? Oh, sorry. Um, Stupid button. The call was, is this a rising wedge? No, I see this as more as an inverse head and shoulder. Um, no, I'm not sure where you guys got cut off, but I was suggesting that this resistance level, which is, you could say is a valid level, of been putting your order in above that by say 10 pips at 86.70, means your risk is going to be slightly higher. But if you're targeting 2,000, that's a nice round number of 2, then that's miles away, and you've certainly still got plenty of risk reward in there. Yeah. Okay. If price breaks the low of the previous bar, he's looking for an engulfing bar that is bearish, bullish, and wants to take advantage of that. He says that by placing. Who's he? Oh, Grant. Alright. If price breaks the low of the previous bar, he's looking for an engulfing bar that is bearish, bullish, and wants to take advantage of that. He says that by placing your entry with the previous bar. Oh, this is on this bar here. You're talking about the pound Aussie? With the previous bar, you are unlikely to get triggered in if it doesn't go in your 5. I quite like this. He's thinking. Not sure if I've explained it well enough on this chat system though. Okay. I'll come back to the Euro Aussie. I just want to answer this question. Engulfing bar. Price breaks the low of the previous bar. He's looking for an engulfing bar that is bearish or bullish. He wants to take advantage of that. Price breaks the low. You mean breaks the high rather than the low? Yeah. Perhaps he's looking at the bar on the 12th. Right. This bar. So if it broke the low of that, he wants to go. I don't understand why. When you're clearly oversold, but if it breaks the high of that, then that's what we want to see. That's what I'm looking for too. I'm not sure about engulfing, but I think that's getting. If it breaks the high of that of this bar, oh, so placed it above this bar here. Place it above that bar instead of this bar. To me, this is just one day of buying, and if it gets a higher high, then that's great. Um, you know, but I think you'd want to have pretty strong reasons to want to get in on a trade that early. Um, Going in today is better than going in yesterday when you've only got one day of buying against this quite clear selling sentiment. Um, so I'd want to see a little more buying than that. If that's what he does, then that's great. Good for him. But the other thing is, as Shane's pointed out, is there's quite a bit of a resistance level here as well. And just going above this bar or this bar is probably a little preemptive. What you also should be doing is looking at what the majors are doing. We've got the Aussie having formed a nice double bottom here, starting to get bullish, and you've got the pound doing a similar sort of thing. Um, and then from a fundamental point of view, who's the stronger? Well, you'd have to lean towards the POMs at this stage to give you an idea of where this is going. Even despite their shitty inflation figures yesterday, they're still probably in a better position than we are, looking at raising rates than what we're looking at lowering rates. To be honest with you, I can't see us lowering rates either, not with the Aussie dollar falling so far. That's effectively an interest rate cut in itself. So, yeah, it's just a little preemptive, and it'd want to be a stronger reason than what we've got here for me to do what I would consider an aggressive entry. Yeah. But you have the trend line and the fib, yeah, but you also got this resistance here as well. Yeah, okay. He's waiting for an engulfing bar. Well, an engulfing bar. If he's looking at the 12th as an engulfing, wanting this to be an engulfing bar, again, I think that's preemptive. It's, to me, it's you need to see the sentiment and go with it. You'll make more money going with that than trying to presume that it's there. Yeah, and I think that's probably the big difference between us. Also, I am arrogant to a point. I'm not that arrogant to think that I know better than the market, or that the market will agree with me. Yeah. Okay. Someone wants to look at the Euro Aussie. Euro Aussie. Well, um, hmm. There's obviously a bit of support here at 42. Some resistance there. What is it? $1.50 is the big one. So we can see those go all the way back 90s. Why won't my pound Aussie do that? So we can kind of see that minor support there. Bigger support probably there. And then you did way down here, but that's, I'm not really interested in that at the moment. Big resistance at the 50, and then probably weaker resistance, but still valid at 55.50. So looking at daily price action. Similar to the pound Aussie, there's a ring low there, yep. Unlike the pound Aussie, there's trendline support, there isn't. Even if we go back to them, bet you've done one of these, haven't you? Not quite there, but let's try from there to... Yeah, still nothing. Okay. No trendline support. Support is quite a distance away. You know, this one here, you'd have to say is weak. I mean, look how much it's walked all over it. There is valid, but I'd call that pretty weak support line, which wouldn't warrant me jumping in. Looking at the 200 EMA is pretty flat, and if we sort of back off and have a look at that in terms of, let's just remove some of these. And we can say, well, it's more range, if anything. It's certainly overdone, and we're getting divergence. When you're range trading, that's what you want to see. I just don't see this as a strong enough support line here to warrant a trade. I prefer to be short this, if anything. But there's no sort of short entry either. If we go down to the 4 hour, there might have been a short entry a day or so ago. But again, there was a bit of divergence there to go long potentially. Is there a resistance level there to trade short from? Well, there's a weakish, or It's certainly stronger than this support level, but that resistance level is still a fair distance away. So it's out in the middle of nowhere, really, and not really wanting to sort of participate. I'm already long Aussie, and whilst a bearish euro, do I want to be bearish at? Well, I suppose we've got a week before the ECB meeting. You could get a trade in and out by that time. Yeah. That's not something that I'd be interested in sort of looking at. And you're wet and filthy. Get out. I did go through all the pairs this morning, and there wasn't much that I was really interested in. All of the US dollar pairs are well overdone, unless you go out into the exotics. We assume you were talking about the dog. Sorry, one of the dogs. Border collies. It hasn't stopped raining here since Christmas, which is fabulous. But she's filthy. Come on, get out. Yeah, so US dollar hugely overdone on most pairs, and offering sort of phase two trading in a lot of them, or is currently in phase two. With divergence, the Scandinavians tend to be showing that, the clear divergence there. I wouldn't go near the ruble. The SEK is offering a bit of divergence. The Czech is, well, nothing yet. And then you got some even more exotics that, that's maybe a potential phase one trade on the Turkish. There's clear divergence. So I do see the US dollar having a bit of a pullback, and that's why I'm quite happy to be long the Aussie. The pound did have a bit of a flick overnight, thanks to the inflation, but I do expect that to sort of get back up here into the 55 area. But am I going to trade it? No, I think I'll stick to the shorter time frames at the moment, because there's nothing really that I'm that interested in. Although this pound Aussie is something worth looking at. Aussie Kiwi I've been stalking, but as I said, I want this high to be broken before I jump into that. Aussie Sing is not something that I'd particularly trade when I've already got the Aussie on. So what's this? You don't want to play, do you? Okay. Right. That's it for the day, guys. Back on Friday, and I did say I was going to go through all the pairs, but obviously we've done a fair bit of work already. So I shall leave you to it. Good luck with it all, and if you've got any questions, shoot me an email. Otherwise, Friday tonight's going to be fun with the, as I said at the start, with the Europeans and the oil inventories. But yeah, should be good. I'll speak to you Friday.